Hi everyone, welcome back to Daddy Stab PH where we do Skillshare at saka personal development videos for the adulting and millennial Filipinos like us. Today, pag-uusapan natin ulit yung retirement portfolio. So this is episode 3 of DIY investing. Hi everyone, welcome back to Daddy Stab PH. So this is episode 3 of our DIY investing series. In this video, pag-uusapan natin yung alternative way of doing DIY investing, no? Aside from 100% stocks. Pero syempre, ang objective pa rin natin dito is because yun nga, DIY investor tayo. We have to keep it simple at madali lang i-manage yung ating portfolio. So last time we talked about what's a portfolio, ano ba yung asset classes na bumubuo ng portfolio like stocks and bonds, yung role ni correlation in mitigating risk and volatility, and yung ating declaration na we want to find a consistent portfolio, a more stable portfolio with good returns, no? So for today, we will be talking about the Sharpe Ratio naman. What is the role of Sharpe Ratio sa pag-analyze ng mga portfolios? And we will also be introducing our stable portfolio strategy and criteria. What makes stable portfolios stable? No? What are the principles involved? And what are the popular investment portfolios out there? So what are the existing portfolios na backtest na pag-aralan na ng mga tao? And lastly, we will talk about the risk parity method, no, by Ray Dalio. So the risk parity later on, as we will learn, is one of the core principles. So moving on with our assignment. So what is a Sharpe ratio? So essentially, a Sharpe ratio, it measures the risk versus reward of your portfolio. No? The higher the Sharpe ratio, the better the reward versus risk, and vice versa, of course. For those who are interested in knowing the formula, ito siya. So I think pwede naman nating i-deep dive to, but for now, it's not necessary. So just for appreciation. So I think this is a good time to quickly exercise yung mga natutunan natin in the previous 2 episodes, no? So let's dive agad sa mga different types ng portfolio and apply yung mga metrics na napag-usapan natin. So let's do this. So let me just turn off my camera real quick. Right. So right here we have three portfolios, no? You have the Rick Ferry Core 4 composed of 48% stocks, the golden ratio with 42% stocks, and the JL Collins, no, portfolio with 100% US total stock market, no. So ito yung composition ng stocks per portfolio. And as you recall last time, yung stocks ang main driver of growth ng portfolio. So given this, ina-expect natin na si JL Collins ang pinakamataas ang growth, followed by the Rick Ferry Core 4 and the golden, then last dapat yung golden ratio. So yung ibang components ni Rick Ferry is may REITs may REITs siya, may US intermediate term treasuries, at saka may global stock market, no? So hindi lang pala 48, may plus 24% pa. So mas mataas yung stock component ni Rick Ferry. So 72%. Okay, so assessing, backtesting yung tatlong portfolio, no? Kung titingnan nyo tong line graph natin, meron tayong blue. The blue line represents the performance ni Rick Ferry Core 4. Si red is the golden ratio portfolio, and the yellow is the JL Collins. So this is a backtest conducted between 1994 until 2021 sa present, no? So, what if naglagay tayo ng $10,000 in each of these portfolios back in 1994? How would they perform? So, yun yung gusto nating malaman dito. So, for the sake of reinforcing yung Sharpe Ratio concept, no? So, tingnan muna natin yung Sharpe Ratio. So, makikita nyo dito, yung Sharpe Ratio niya is 0.55 for the Rick Ferry Core 4, 0.8 for the Golden Ratio, and 0.55 sa JL Collins. So, you can pause the video for now. After some thinking siguro, you would have thought na mas maganda yung risk versus reward ni Golden Ratio. Tas parehas lang yung risk versus reward ni Rick Ferry Core 4 at saka ni JL Collins. Now, let's look at the stats. No? The CAGR or the compounded annual growth rate ni Rick Ferry Core 4 from 1994 hanggang 2021 is 8.44%. Prior to inflation. Golden Ratio has a 9.17%. JL Collins is 10.10%, no? So as you can see, ito yung mga performances nila. Pero magtataka ka dahil si Rick Ferry Core 4, you might be asking, di ba? Ang taas ng kanyang stock component. Bakit mas mababa yung kanyang CAGR compared to Golden Ratio? So let's look at the volatility naman per portfolio. So as you can see, kung titignan mo pa lang yung graph, ang pinaka-stable na is the red line, right? So, yung pinaka-volatile is the yellow one and the medium volatility is yung blue. So, tingnan natin yung stats nila. Yung standard deviation ni Rick Ferry Core for the blue line is 11.67% na standard deviation. So, medyo mataas na volatility to. The Golden Ratio has an 8.47. So, it's just 2/3, almost 2/3 nung sa Rick Ferry Core 4 and just half nung JL Collins, which is 15.36 standard deviation. So the best year, yung growth ng isang portfolio per year is 28 sa Rick Ferry, Golden Ratio 24, and sa JL Collins almost 36%, no? The worst year naman, so yung pinakamababa in a year is negative 28%, less than half for the Golden Ratio, negative 12%, negative 37%. So dito pa lang makikita mo na kunwari, you are using these portfolios as for your retirement. Alin dito ang gusto mo, no? And if you're relying on these things for your income, would you want this kind of worst year, di ba? Ito naman, so let's see naman yung maximum drawdown. So dito, regardless of the duration, basta yung laki nung binaba ng portfolio through time, bago siya makabawi is sa Rick Ferry Core 4 is negative 43%. So I think this is the during the time na nagkaroon ng either .com bubble dun sa 2000s dito or sa sa US real estate bubble. Yun. So kung nanonood kayo ng The Big Short, ito yun. Ito yung time na sobrang bumagsak yung stocks ng US. So drawdown is negative 43.3% for the Rick Ferry, negative 24% sa Golden Ratio, and yung JL Collins negative 50%, no? So you can see now kung bakit na mataas yung Sharpe Ratio ni Golden Ratio compared dun sa JL Collins at saka dun sa Rick Ferry Core 4. So I hope etong part pa lang ng video na to is you are already seeing ano ba yung gusto nating gawin, no? So we are going to compare portfolios, and we are going to take some money out of them every now and then to simulate a retired life, no? And we'll see kung ano yung performance niya through time. Okay. So moving on dun sa ating topic for today nga. So a bit of background lang. So yung motivation talaga for doing this series is for those people who are looking for a less volatile way to save, no? Kasi it's your hard-earned money. I get it. We were always taught to put our eggs in the stock market basket, di ba? So dati kasi noong 2019 sinasabi na 8,600 na yung PSEI, to the moon. to the moon ng PSEI since sa panahon ni Gloria, no? So yan, nasampal tayo ng pandemic, di ba? So some of us, I know I am rethinking my appetite as an investor. And kasi pero we feel helpless, di ba? If you all know na stocks lang is the way to go, you will feel helpless. But based on research, may other ways to do it, no? And it's not that hard as you think. Problema kasi talaga sa atin is yung PSEI lang lagi nababalita. Tapos may mga stocks lang, stock picks, di ba? Pag nanonood ka ng mga call, di ba? May mga picks sila. Like, ako ngayon, na-hype ako dun sa Mond, yung Mond na stock picking. Pero hindi na yun yung goal natin, di ba? If we want to be a simple DIY investor. We want to be a passive investor. So, like I said, in the Philippines setting kasi, yung traditional way of investing is either investing in the stock market like Call Financial, BDO Securities, BPI, whatnot, or just putting your money sa isang investment fund, UITF, mutual fund, VUL, ng isang company, di ba? Which incurs management fees as you go along. No? So that's the traditional investing, and it's usually just composed of stocks and bonds. Which is very basic. The stocks and bonds are the core components ng isang portfolio, no? But the thing is, adapting that kind of methodology is a volatile way to go, as you have seen dun sa JL Collins kanina, no? So worst year minus 37%, maximum drawdown negative 50%. It's not pleasant, right? Which begs the question, diba? Is there a smoother path from A to B, no? Some of you are asking right now kung may ganun bang paraan. Ayun. So how do we avoid these situations, 'di ba? Na makakita ng big paper losses sa value ng pera mo. Pwede mong tigasan yung hindi matigas ang aking paninindigan kaya sarili mo, yung paninindigan mo dahil invested ka na sa stock market, or you can find another way, 'di ba? Kasi 100% stocks is an aggressive way to invest, no? There's always that risk of a catastrophic loss. It took us a decade to get here, then biglang babalik lang doon sa level na yon, no? So which hurts real bad. So ang pangit sa feeling. So I think there are two ways to look at it, no? So you can look at investing kasi from a financial perspective, yung mathematical aspect niya, yung mga RSI mo, yung computations mo, CAGR, whatever. But there's always an emotional component, di ba? We cannot help but feel bad pag mababa yung stocks natin, or pwedeng ma-hype kung may hot pick for this season, no? Okay, so let's go to the criteria, no, for our retirement portfolio given yung mga lahat na napag-usapan natin right now. So first, let's remember who we are. So as DIY investor, we want to be passive. Money is a tool to achieve freedom, 'di ba? Mga basic woo philosophy, 'di ba? We want to spend as little time as possible managing our portfolio. Amen. Kasi may trabaho tayo, may baby tayo. And we want to spend our life on things that matter. We are not attempting to beat the market. Trabaho na ng ibang tao yan, mga day traders yan. We just want to, mimic the returns ng market and make it less volatile, di ba? While maintaining the returns. We just want it simple and stable. Yun lang yun. Ganun yung style natin. And given na ganun yung style natin, ito yung retirement portfolio core principles natin. So you have Ray Dalio's Holy Grail principles. So yung naalala nyo yung table natin last time dun sa correlation, we want a lot of uncorrelated assets sa ating portfolio. But given na lang tayo, retail investors lang tayo, okay na yung 4 to 5. Mamaya pag-uusapan natin yan. We want to be a DIY person, no? So gumawa ako dito ng parang abbreviation niya, no? So DIY investing is for kids. Keep investments diversified and simple. So yun. So which is composed of two principles, which is the macro asset allocation, di ba? So mayroon kasing yung macro asset allocation, tinitignan mo lang yung asset class nung isang hindi ka tumitingin sa specific company, sa stock market. You just want the PSEI. You want the index, you want it diversified, and you don't want to focus too much on a sector or on a company. So this is called Jack Bogle's index investing for diversification. So for those of you who know Jack Bogle, he's the father of index investing and the lazy portfolio. Yan. So, how do we keep it simple? Through Jack Bogle's idea of indexing, and it's called ETFs, no? So, exchange traded funds. So, yun nga, it's a basket of financial products that trade on an exchange just like stocks, pero diversified na. So, to give you an example, if you buy a FM ETF or an ETF na for the PSEI, you get a unit of that gets you everything on the PSEI. So, diversified agad, which is what we want, diba? Dun sa ating kids principle. Yung Nasdaq, if you buy the Nasdaq, here's what you get. If you want the S&P 500, here's what you get, diba? So, this is the lazy way to invest. Keep it diversified and, diba? Simple. Yeah. Ayan, so, para sa mga hindi kilala si Ray Dalio, ano lang naman siya, hedge fund manager lang naman siya with a $17 billion net worth. He manages around 160 billion of worth of money sa Bridgewater Associates. So he's a very parang say conservative pero din siya, mga principled guy din siya. So yan. And Jack Bogle, so maybe he's more popular than Ray Dalio, no? Mababa lang yung net worth niya just because binibigay niya sa atin yung kita ng company niya, which is kaya siya yung idol ko. So bigyan ko lang kayo ng example. Sa Philippines, ang average na management fee, no, is around 1% to 2.5%, mga ganun. When you buy an ETF from Vanguard, which is the company of Jack Bogle, it's just 0.06%. Ganun kababa. Ang average sa US is 0.24% ng portfolio o ng ETF mo annually. Sa Philippines, it's around 2. It can go as high as 2-3% annually. Naalala ko nga dun sa isa kong VUL dati, mga 2015, it's 4% annually. Yan. So, yun na. Just to give you an idea kung bakit napaka-astig nitong lalaking to. So, I know I said na we will be talking about the types of portfolios that are stable, no, and applies the core principles na binanggit natin and the risk parity principle ni Ray Dalio. But I think I'm going to split this video into a two-part series na lang. So this will be episode 3, 1, tas magkakaroon tayo ng part 2 next week. And just because may mga kailangan pa tayong gawin personal matters. So hopefully guys, you appreciate yung ating mga napag-usapan today. Actually, habang binabasa ko ulit siya, habang dinidiscuss ko ulit siya, talagang nare-reinforce yung pakiramdam na hindi yung 100% stocks it allows you to thrive dun sa times of prosperity, but it doesn't protect you doon sa environments where nagkakaroon ng big crashes like yung 2008 housing bubble, yung dot-com bubble, yung pandemic. So I think this is a good way to explore other options that might be more appropriate for you, no? So ayun guys, see you again next time. Pasensya na ulit, we have to cut it short for now. But promise, itutuloy lang natin to, and hopefully na-appreciate nyo na yung mga application ng mga concepts na pinag-usapan natin sa episodes 1 and 2. I know they're a bit theoretical. So nonetheless, I hope na na-appreciate nyo. Until next time.